Hello, 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 everyone. Happy Tuesday ahead of the CPI Wednesday. How is everyone doing? Good morning, Legion Reaver. I saw your little question in Discord. So there's not much going on. Maybe we can talk about that for a few minutes in terms of probabilities and why they're so important and thinking in terms of probabilities. Bank of America raises minimum hourly wage to 24. Huh? Very interesting. Did not see that, Sterling. Did not see that. So what else do we have over here? Hold on one second. There we go. What else do we have? What else? Dollars likely to rise if your inflation data is stronger. Well, we're going to find out tomorrow, and the follow through with the little percent beat buy against the rotation zone. Good morning, by the way, Sterling. Bank of Japan is to see little need to hike the interest rates next week. All right. Apple loses in their fight over the 13 billion Irish tax bill. Money grab. By the way, what about that new iPhone 16 with the camera button? Oh boy, it's going to revolutionize everything. There you go. Bye, Apple. That was a joke. Oh boy. Good morning, Royal Palms. Good morning, John. Good morning, Jacob. Good morning, Ted. Hello, Charles. Hello, people, other people in the background. So, again, very quiet day. We had the business optimism index coming in a little lower than expected. Red Book, did it come out on time? Sometimes there it goes, 6.5. So, still holding up very strong. Very strong Red Book number still. So, not tipped over yet. But that's it. I mean, we have nothing. We have nothing left. So, in terms of the markets, Apple down after their iPhone and AirPod and event yesterday and watch event. Nothing groundbreaking with that. You have the other mega caps all up. So, market rally. We got the bounce yesterday. Then we dropped with the VIX below 20. So, I'm choppy to the upside still going into the CPI number tomorrow, especially with no news coming out. Consumer cyclical technology and comm services all leading higher. It's very just some minor negative today. Again, not much to talk about. 73% for a 25 basis cut, rate cut. 73%. And then a double cut for November, and then another single cut to take it back down to potentially 4.25 to 4.5 by the end of the year. Look at this. It has all the way back down by a year from now to 275 to 3. This is like major recession territory. Wow. So the market's starting to price in and almost out of fear. Can we get to neutral ahead of the CPI? That is the question. We had Oracle also up. Okay results, decent guidance, but then their partnership with AWS announced, and they're a huge gap up this morning. Today, nothing really before the open, but after the close, we got GameStop, Dave and Buster's. Not much to talk about there. Let's see. Good morning, Anissa. Oh, well, I'm glad you enjoyed it. Thank you for watching. Thank you always for tuning in, Anissa, and your kind words. What was this? Spotlight from Apple will launch a trifold smartphone. Oh, gee. I mean, Apple lost its innovation years ago. I mean, now it's just like, let's make the next iterative step. Nothing's been groundbreaking. Hey, Mark. So we'll get into some probability stuff. Let me just get through a couple things I'm keeping an eye on. So I was watching yesterday's high. It looks like we're taking it out now. My minor targets, the upside is still 55.10, and then more key is 55.32 area. Using the retracements, 55.32 is why am I liking that? Just because that's the 50% of the sell-off from last week. So, and then on even through tomorrow, if it gets back above the rotation zone, 55, 50, 55, 66, 25 on a closing basis is very key before I will start just watching for a retest of the end of August areas. But it's really on any continued rally today that 55.32 is key. Pullback level, today's low from earlier, about 54.63, and then we got to drop down because 54.63, and then you got some major support right around 54.48 to 54.50. Again, this is the kind of stuff you don't want to get chopped up either ahead of the CPI number. So on a continued rally for the NASDAQ, still this 18,950. Above there, let's just see what the key levels would be. 18,950 right in here, 18,955. You got a harmonic cluster in there. You have a very key support resistance level in there. And then 19,182 would be the next level I'd use if we continue to rally through the CPI. Hey, Richard. Let me get to your SMH question in a second. The Dow, you got major resistance at a 41,075 area. I'm watching anything above 41, between 41 and 41,075 for rollover plays. If it breaks above 41,075 with some momentum and then retest that, the key is 41,150 on a closing basis. All right. So what key is your little support levels, very strong support right around this 40,800 to 820. Just going through this quickly because there's not much to talk about today. Russell watched yesterday's high and Friday's lows. Those are the two key areas. As I said, the VIX is below 20 and trying to roll down ahead of the CPI number, which supports, if it continues to roll down, it supports a choppy to upward bias. DAX, I'm watching if we take out Friday's lows. Friday's lows, DAX is getting tired. It's got daily cycles turning up, but I'm really watching Friday's lows. If it takes that out, if it rallies back up, it's still 18,630. Not much to talk about with the notes or the yields. The yields dropping again. They were up a little, slightly up, but watching to see if we get some kind of key bottoming pattern ahead of tomorrow. So I'm watching to see if this forms a very sloppy double bottom pattern with the moves down from Friday as one side, and then if we push down there today. That's what I'm keeping an eye on. Other than that, not much to talk about. Not much to talk about with the 10-2s. Dollar index, which I mentioned yesterday, we did close above the high. We did close above the 62.5. We've already rallied to the 87.5 today, so at least that would have to be a stop reduction and not take a lot of risk. Now, ahead of the CPI numbers, put that information in. We still have daily cycles going up. If this were to follow through above 101.52 on a closing basis, then it would be something potentially I'd look for to continue run higher. If it stalls out here, that's why, from my perspective, it'd be a wise time as a teaching level to, if you're trading anything dollar related, raise the stop. Because yes, you did have the percent beat buy, but remember, it's in the rotation zone. It already went to the other side of the rotation zone and completed the 87.5 rule. So it would, at least I'd be taking something off and raising a stop to cut down on risk. And then if it pops back up, see Remember, let's say it popped up and closed above 101.52. I could always add back to that trade. This is a teaching example. And then manage the trade as if it's a double because it's still a valid double. So don't be afraid to unwind something, raise a stop in case it turns down. Worst case, it could be a slightly profitable or even a break-even trade. But if it pops up, you still got an add back because now you've triggered another pattern and now you can run it higher. You can do those kind of things in markets. That's something for you to investigate yourself. Crude is trying to make a little horizontal triple bottom, which slightly favors a continuation, but I'm going to be watching to see if crude can pop above 69. Again, that's only for a pop because your rotation zone's at 70. We do not have a strong bottom yet. Talked about natty gas on Futures Edge, so if you want to know more about that, tune into that. Gold, still holding the rotation zone. Rotation zone is now roughly about 25.20. Other than that, still holding it. Then I'll get some move on tomorrow. What else? The yen with no potential rate hike. The yen still has a big potential double bottom, but the trend is still down, remember. Unless the yen starts closing above the rotation zone, the trend is still down. It's waning in momentum. It's losing a lot of momentum against very key support down here. But in the short term, the only thing, there's been selling pressure above about 143.80, so it's got to get some momentum going above there. That was prior support back here at the about, right at August 26th, August 27th, becoming resistance. That's the only thing I'm watching for in the short term heading into the official Bank of Japan rate do nothing. What else? Not much to talk about with Bitcoin. Ethereum still stalled out at the the first target again. Still looks like the markets want to roll over, but it's just nothing yet. Let's look at natty gas. You just got to watch that. There's nothing else to talk about. This is very interesting because it's making a really strong case for a base. So right against that 200, very strong support at this 212. And if it gets a close above 2, it hasn't even confirmed it yet, but if it does and triggers, then you have a double that could easily take it. And I went over this in there, how I'd look to do something with the third target here and the 62.5 rule. I know I covered that. I believe I covered that, unless somebody correct me if I didn't, and why I look to extend the third target. So please watch that if you want to understand that concept. Again, I'm just trying to teach some more stuff. We'll go into probabilities in a second. We'll look at the SMH in a second and why I think in terms of probabilities and traded expectancy. Very key resistance right now. Let's put on the retracement harmonics too. 551.82 on a continued rally. I'd really watch 550.72 to 551.82 as a very key resistance zone. Okay, the tip over move to continue to go back up and test the end of August would be roughly about 555 on a closing basis. They need that to shift the probabilities. See, there's a gosh darn probability word. 460.50 is very key in the Qs. What else? NVIDIA, inside day yesterday. Still, remember, declining rotation zone. This has shifted the probabilities to lower. So, still watching for rollover plays. The key area I'd really start focusing on is if it rallies around 111. All right, let's look at the SMH. Holding here. what was your question? If we see a bounce in SMH daily 200, where would you look to begin to look for another short or long? Another short, because it's still held on the bigger term perspective. Well, I got to clean up this chart. I got to clean up this chart. Let me fix this. This is a mess. It's all wrong. It's all wrong. Oh. Let me just, we finished the double there. Let me just get this out of the way. I don't know how we got so many lines all over the place. All right. There we go. So, I have this on my other charting platform. It's still held. It retraced up 50 to 62.5. It is not closed below that. Now, for rollover plays, this is weakening. And based off my viewpoints fundamentally on the semis, I'm watching for rollover plays. But the key area for me would be, first area I'd be looking for is either on a bounce above 228. That'd be the first key area I'd be looking for a rollover play. Unless it goes down and takes out Friday's lows, then that would be a continuation play. And my continuation play would be going down and really watch this key gap reversal from Monday the 5th. That is a very key support. You can see in this area. In this area is a very key support. So that would be a first target I'd be utilizing if we took out Friday's lows. If it rallies, then I'd be looking for some kind of topping pattern right around this 228. But if we did not get it, would not be a short play for me. This is sort of in no man's land right now. So would I be doing anything today? No. Unless we took out Friday's lows, that would be a continuation play. Therefore, I'd be looking to go with the momentum down or watch for the bounce play. But on the bounce, it would need to then set up a topping play that would have to trigger to rotate back down. What else? I wanted to talk about this. Why I think in probabilities. Because I've used trade expectancy. Trade expectancy is average profit times a probability of winning, or a probability of a successful trade, to minus average loss times a probability of losing. Gives me my trade expectancy. So that's why I talk about this. So you can know these from your stats. It's also why I talk in terms of patterns, because different patterns can have different probabilities. Okay, so if I know, and this is why I also have targets, because targets help me generate my average profit. I could also use my profit to the first target. But let's say I'm doing something with taking something off at a first target and then trailing. That's where I have to incorporate some average profits from my trading results. So per strategy, I need to know or this could be from testing, the average profit of the trade times the probability of winning. Then I'm going to subtract the average loss times the probability of losing. So let's say my average profit was $100 and I had a 50% odds. All right. That would give 50% times the average profit of 100, which would give $50. Let's say my average loss was also $100 and the probability was 50%. That would be minus 50, or it would be positive 50, but I'm going to subtract it, which would give me a 0. I'd have a trade expectancy of 0, which then after commissions and slippage is a losing system. So either my average profit has to go up or my probability of winning has to go up, or a combination of both. Let's say I had a 2-to-1 reward to risk ratio, which means my average profit was twice that my average loss, and I still had a 50% probability of winning. Therefore, my average profit, let's say, is 200 times probability of winning is 50%. So now I have 100 up here. So I have 100. All right. And then average loss, still, let's say that's still that $100 because it's 2-to-1 reward to risk ratio times probability of losing of 50%. That would be my average loss, would be 50. So now I'd have 100 minus 50, which gives me a trade expectancy of $50. So after commissions and slippage, you're looking at most likely a probable system. Now, let's say I'm doing average profit at 100 still, and my probability of winning is now 70%. Therefore, 70 times 100, 0.7 times 100 is $70. And my average loss, let's say it's $100 still, my probability of losing is 30%. So that's $30. So it'd be 70 minus 30. So it'd be $40 positive. Again, probably that's a positive trade expectancy. So after slippage and commissions, probably a decent system. So why, if you can say, well, I have no idea what my probability of winning is. That's if you don't know, you have to define it based off each individual strategy. That's where people says, if they say, oh, you know what, like Coco, buy the dip, sell the rip, easiest strategy ever. What's your probabilities? Which dip? Which rip? What are your probabilities? What's your setup? It's not just buy the dip. When do you buy the dip? When I think the dip's done? I mean, this is you need some kind of methodology that you could test out, whether it be through repeated action of taking the same thing or through, programming it, testing it, manual back testing, however you want to do it. This is where people say, my probability, I'm 60% off across all your setups, across which time frames. If I personally can't quantify stuff and probabilities with average profits and losses, and I'm just going over this at a high level, there's ways you can really dive down into this. But it's also why I need to know targets and stop losses. Because think about this in terms of stop losses. Let's just say my average profit isn't a profit. Let's just say it's how much do I have until my first target? Let's say I'm taking it all off at my first target. And what's the probability of it getting there? So I could change the words. And then we have the average loss, which could be stop loss times the probability of hitting stop. All right. And this is a probability of hitting first target or reaching okay. And there's multiple ways you can structure this, but this is why I talk in terms of targets and in terms of stops and where the probabilities shift. Because if I don't know these things, again, people that don't have targets and stops, I don't know how you can properly trade. Because if you have consistent targets and consistent stops with a consistent entry method, then you can also figure out your probabilities. But if you don't have these things, you can't figure out your probabilities, or you can't test your probabilities. And if I don't know a trade expectancy, then personally, I don't know how to function, because I don't know if I keep doing the same thing over the long run. If my trade expectancy is negative, all right, then if I keep doing it in the long run, I'm going to lose my account, because it's slowly going to grind away at it, no matter what I do. Hit the like button. Hey, Stafford, how you doing, buddy? It hurts my head to try to you gotta, all right. The probabilities come from knowing your setups. You can test them out. You can even take your trading results, but you need to know, don't just lump everything together. Like I talk about different probabilities. Doubles have different probabilities than percent B entries. I'm just saying a couple things. They both have different probabilities, but I know that, and I know it from testing and I know it from results. Like let's say I do 100% B buy setups or percent B just trades, and 68% are winners. Well, I have my probabilities. Now I better make sure what's my average profit and the average loss from those trades. I can figure it out. Then I have my trade expectancy for a percent B setup. Same for a double setup. What I'm trying to show people is you just can't trade based off of, you got to start thinking in terms of probabilities and trade expectancy. It's also why I stress, even though just a close beyond the level is not necessarily a trade. When I say it's like, well, we've shifted the probabilities, I want to know that because that's based off testing across a lot of markets. When the probabilities are shifting, do you think I want to take a lot of trades against the probabilities? Like, let's say the SMH closes below this 191.47. Do I want to have a bias to the long side still? I better be looking for rollover plays because my probabilities, remember, when you trade with the trend, and if I close below 62.5 and we have a probability of then returning to 154.83 over the next few weeks and months, I'd rather be focusing on trading with the potential trend, which is shorts, rather than trying to buy every dip, because then I'd be against the probabilities. I'd be against the overall trend. Is a probability a guarantee? No, just like in the example, you're not. It's why people search for the holy grail. Like, I need 100% winning systems to rule out any chance of loss. You're not going to get it. You're not going to get it. Because even think about that logically. Is there something, you could have news out of nowhere. So even if you curve fit, and this is where people curve fit systems, and they're like, over the last 3 months, there's 100% winners. Okay, but that's over the last 3 months, and you curve fit it. Now, what happens when something out of the blue pops out? Like, China invades Taiwan. Just an example. Oh, that markets freak out. Well, but it was 100% winner. Now the market's freaking out because you can't have. There could be massive earthquake hits California, trillions of dollars of damage. You don't think that's going to affect the market? That can come out of nowhere. So your 100% system, the 100% buy the dip, you know. What are your thoughts on Siri now that they have restructure? Buffett owns 30% of the what's the deal? What's the deal? Satellite play. What was this? A reverse split? Yeah, reverse split. Well, I gotta wait for this chart to get split adjusted before I could remind me to look. Do I have any fundamentals on this? No. No, I don't. I'll have to look at this once it's split adjust so we can look at the technicals. I have nothing fundamentally. All right, let's take a look at the S&P. Again, personally, this is where I also come up with key support resistance because, as long as we roughly hold on any pullback 54.90 to 54 about 92, I'd be looking for that support to hold personally. Now, we could go easily into a choppier day, but until we lose that, my bias with that in the short term would still have to be up after any pullback plays, separate from looking at this. So tick, only a plus 600, so not a super strong tick opening. So why do I look at that? Because now with the tick pulling back, I want to make sure key support holds. And this is only for people in the short term. And what I personally recommend is, most people focus on the longer term, but there are a lot of short-term traders here to look at stuff. So as long as we can hold support on any pullback, I'd be looking for long setup entries. If there's no long setup entry and it bounces and leaves the station without me, oh well. Wasn't my trade. And just like I said before, every setup does not mean it's a trade. Because if I can't get proper reward to risk ratio, which is a whole nother talk, if I can't get where I need my stop to be and where my first target is, if I cannot get those in the right areas, then there's no trade. Why? What's going on with my mouse? There we go. Why? Because that blows my trade expectancy out the window. For example, if let's say I had a target, let's say I had a target at 55.10. Let's say I had an entry at 54.95. This is all hypothetical. All right, so there's a $15 to my first target. Now, let's say I need my stop at 54.65. So 54.95 minus 54.65 is $30. So now I'm risking $30 to make 15. Again, hypothetical. What would have to be my probability of success in order to make my trade expectancy correct? Well, I'd have to at least have the I'm taking double the risk. So I'd have to have my odds being, even to get to trade expectancy of break even, I'd have to have 2 times as many winners as losers. Think about that. Okay? So that's why, you know what, if I had to have my stop here based off of the trading system or the setup I'm using, and my targets here, it would be a no trade unless I knew it was at an incredibly high percentage, which most things aren't. Therefore, I'm not just going to go, I'm going to move up my stop. Because I got to get my trade expectancy positive. No, it's a no trade then. Now, let's say based off the system, the stop was up here at 55, or the target was up here at 55.32. So now, what do I have? I have like around 37 to my target and 30 to my stop. Now, let's say based off my testing and my work I've done, I'm like at 60% success rate on this kind of stuff. And this is all just hypothetical. So now I'd be taking 60% times that 37 to the first target, and 40% times that $30 potential loss, and therefore I'd have a positive trade expectancy. If I knew that over lots of work in the long term from either my own trading results or for testing, that's something I could rely on. That's why I need to rely and also know what my setups are. Not just, I think it's a buy. Well, okay. And based off of you think it's a buy, what's your odds of being right, getting to your first target before you get to your stop? And if you can't quantify it, personally, I have no business trading it. You might do whatever you're going to do, but I'm not going to do that for my own self because I have nothing to rely on. Therefore, let's say it's a losing trade, and then you get another losing trade, then you get another losing trade. Well, is it you could easily, even with the 70% system, you can have 3, 4, 5 losing trades in a row. But if I know my odds are still 70%, it was just a string of trades that didn't work out. But if I don't know that, this is where people then start second guessing because they've never done the research, they've never done the testing, or they don't have the stats to back up what they're doing. All right. Yeah, trade expectancy, the probability associated with the particular setup minus reward to risk ratio plus reward to risk ratio. Yes, you need to know those things, Legion. What's the best RR? What's the best reward to risk ratio? There is no best reward to risk ratio. There isn't. You know, some people are like you know, it's all with your psychology. Some of the greatest traders I know were longer term traders, and they might have a 35% odds of winning. But you want to know when they won? They were riding a trend, so they might only win 35% of the time. But when it was a losing, they didn't lose much, and when it was a winner, it could be 10 times their average loss. So think about that. If your winners are, you know, even at a 35% win rate, you win 10 times more than you lose. All that works out to a positive trade expectancy. And they don't mind the losing trades. They're like, oh, well, that, you know, based off their system, because they're trying to catch the really long term trends. Other people, psychologically, they need a higher win rate. But generally, you're not going to have like an 80% win rate with a 10-to-1 profit to loss. So it's all based off your time frames, your trading, your consistency, everything, psychology. Would you avoid? I adjust my position sizes so my losses are consistent. And for example, as my account grows, again, losses are a percentage of the account. So let's say you have a $100,000 account and you're willing to lose 1% per trade. Just that would be $1,000. If your account's growing to 200,000, that would be then 2,000. Why am I bringing that up? Because then I know, all right, I keep my risk the same per trade based off a strategy. So let's say it's a double strategy, and the risk per trade is 1,000. Therefore, depending on where the stop is for that strategy and the target is, I'm adjusting my position size. So if it's a losing trade, I'm still losing that 1,000. One of the worst things people do is they keep the size consistent and the stops are all over the place. Because why? Let's say I have a 68% odds of winning on a double. But I'm changing when it's a losing trade, one time it's 1,000, one time it's 10,000, one time the next time it's 2,000. Their losses are all. Do I know ahead of time which ones are not going to work out? No, I don't. So I have to keep my losses consistent because I don't know which of those trades are going to be a losing trade. Don't know that ahead of time. You think if I knew that ahead of time, I'd be in that trade? No, because I just, oh, that one's going to be a loser. Why would I get in it? So, since I don't know, I have to keep my loss amount consistent so I let the probabilities play out. If my loss is all over the place, and I'm not talking, all right, I keep it like, all right, if it's $1,000, maybe with slippage, one loss was 1,010, another loss was 970, but you don't want a loss of $2,000, a loss of $3,000 when you're testing and all your things say my risk per trade is $1,000. So therefore, just keeping a consistent trade size? No, it's a consistent loss size. Hope that makes sense, Charles. Okay? Looks like right now it's going to turn into a choppier day unless it can really hold here and get some momentum going. I'm just looking at the tick. This is where people shoot themselves in the foot because they don't understand this kind of stuff. You know, and you got to learn to think this way. This is, if we get any selling pressure in this tick, though, the S&P is trading against that key support. So this is key support has to hold. Otherwise, I'd be shifting in a choppier day. All right. Thank you for tuning in. I hope that helped. Again, we got CPI tomorrow. If you have more questions on this, there we go. Now we're getting the pop. Risk Management 101. Risk Management 101 is the most more important. See, if people focus on risk management more so than trade setups, risk management is a part, but if you don't manage risk correctly, I don't care about setups because they go hand in hand and risk management is more important. All right. You're welcome, Anissa. You're welcome, Charles. Again, thank you for tuning in. I hope these little things can't try to, if it triggers one thing or one thing, oh, I wasn't thinking about that, you know, then it's worth it to me. And that's also why I stress targets and levels because I can't tell you exactly where your stop needs to be. I know where my stops need to be based off probabilities and key levels. But if you don't know that information, it's something you got to research in your own trading. Where your stops need to be, and my stop always is where is the trade incorrect? Where do the probabilities shift that this is no longer has the odds of a successful trade? If my stop is in front of that level, it has no business being there. So my stops are always where the trade shifts to the probabilities are no longer that the trade will work out. And my targets, why do I need a target? Because if I don't have any target, I cannot work out my reward to risk. All right, I shall talk to everyone tomorrow. Have a wonderful trading day. Bye for now.